Kevin Buskey joins us now, CEO and founder of Guideline. Kevin, good to see you again. You've been through a lot since we first sat down years ago, and you've been building this company. Is your sense that maybe a sense of thrift set in for people who have these accounts and wanting to be ready for the future?
Yeah, I think it's a little bit of everything happening in the pandemic right now. What we've seen is small businesses start to double down on real benefits. So away from those office perks and more into meaningful benefits for the future of their employees. And the participant side has been super interesting. We saw initially a pullback in Q1 and then essentially an acceleration in savings in Q2, Q3, Q4. So that's been really, really encouraging. I think a lot of it has to do with people working from home and saving money overall and having, as you've seen in the retail space, bigger cash balances just available. And they're actually choosing to save into their 401k, which has been wonderful to see.
Now, this is happening at the same time that we've seen a boom in retail trading. We talk about apps like Robinhood a lot. That seems psychologically to me to be two different things going on, like some long-term stuff, some short-term stuff. I don't know if you have any insight into the bifurcation there. I mean, it's probably different people, but what do you think?
I think it can be different people, but not necessarily. I think there is a lot of capital in the market. A lot of people have excess income now just with the stimulus. In our ecosystem of those 20,000 small businesses, we have a lot of professional services. So we're not being hit by the pandemic in food service and retail space, but we're much more concentrated in professional services. So these people are just getting more and more real benefits from their employers, and they're using that and they have that free cash flow to invest in both 401k and in their retail brokerage like Robinhood. That's what the trend that we're seeing.
You're expanding beyond 401k. What is the strategy, and what, if anything, have you learned in particular over the past several months about what not just the businesses, but those participants within the businesses that are your customers, what they're going to want and need?
Yeah, ease of use is the #1 driver to our platform. People don't want to necessarily go through a lesson on how to invest, what they should be investing in, how much they should be deferring of their paycheck. So us, as we mature from a 401k company to a retirement platform, we'll be adding and have added IRA, SEP IRA, and in the very near future, HSA. And what they want is a single number, a single retirement dollar or metric that they know that they're on track towards retirement. And that's what we aim to provide in 2021.
We've been talking long-term, short-term. Why aren't you going public by SPAC? It seems like that's the thing to do these days.
I am running away from SPACs right now. It has been super interesting. Clearly, they're floating around everywhere. We are well capitalized and will be even more capital available to us in the very near future.
And I know, your background being a military kid and building businesses, ground up. You're a little, frugal in that sense, perhaps. Chasing SPACs isn't your thing?
Absolutely. I'm definitely frugal. I think there's lots of options for capital and funding right now. I think the pressure of a young company, we're 200 people, yet we manage $4 billion in the market. But do we need the pressure of being a public company right now? I don't think that's necessarily a good thing for Guideline. I think we can do a lot with the capital that we have and the capital that is easily available to us.
Shepard Smith here. Thanks for watching CNBC on YouTube.